There are some things I'll take a chance on, but life is already enough of a gamble for me to put my whole nest egg in the share market. So I take a calmer path. By investing in private credit, I know my money could be growing, not yo-yoing.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB this wobbly Wednesday. I'm Juliette Sarli. Great to have your company. Let's have a quick look at where the local market is finishing the day's trade, off by 1/3%. We had a deeper drop of around 0.5%, around 11:30 Sydney time. But this weakness coming through really being led by concerns, I guess, of a little bit of buyer exhaustion. We had weakness on Wall Street as well. You've got the US government shutdown continuing, concerns about the stock market's rally being excessive. At the same time, though, all of this uncertainty leading into further gains in gold. So yes, we got there, pushing past $4,000 an ounce. Really quite extraordinary when you think about the move that you've seen in gold over the last 2 years, pretty much doubling its value. It was around $2,000 at 2023. So quite a lot of momentum coming through there. Gold stocks, though, taking a little bit of a breather. We'll get into the overall gold picture with our guest Mark Gardner from MPC Markets coming through a little bit later on in the program. And that's, of course, as we continue to monitor what else is happening in these markets on a day of Wednesday weakness. One stock that did well, though, James Hardie, building on gains, and that was thanks to a positive market update. Shares up 8% in New York trade and gaining here too. Let's have a quick look at some of the sectoral moves that we saw today, kicking it off with gold. And we mentioned, excuse me, a little bit of profit taking, but Evolution Mining did quite well, up 0.4%. You'll remember Morningstar did lift their price target on the stock by around 5% the other day. Let's have a look at where we saw some of those discretionary stocks. I had two great chats today with ANZ and also McGrath Nickel about consumer sentiment falling. There was a little bit of weakness coming through from consumer discretionary. In fact, I say a little bit, it was the worst performing sector, down almost 2%. And kicking it off with some of the tech players as well, which were a bit mixed, but WiseTech, Xero, NextDC down by 2.6%. James Hardie, I mentioned in focus, forecasting adjusted net profit will come in between $151 to $156 million for the second quarter, above estimates. Shares up 9.5% by the close. Pro Medicus also in the green, signing a $10 million deal with Germany's University Hospital Heidelberg and the German Cancer Research Institute. Mesoblast rallying 9% after reporting that US revenue for Ryoncil, its therapy to treat children for complications that could occur during bone marrow transplants, had increased by 66% in the September quarter. DroneShield also looking good, announcing it's made software improvements, but Catalyst Metals head the other way. It reported that its September gold production came in lower than expected. Well, the stock of the day was James Hardie on the call, and Andrew spoke to our experts, Michael Gable from Fairmont Equities, Luke Larrative from Seneca Financial Solutions.
Eyeballing it, kind of interested.
Given where it's fallen to off the back of its
it's
results.
It's cheap. It's a good core business. I think it might be a bit early. I think the macro is probably going to weigh on this for a bit longer, but I think there's going to be a time soon where this Aztec thing gets fully sort of digested. We've got some clarity on where this business might be, and James Hardie could rip 2 or 3 quarters down the road.
So it's a watch for you.
Watch. Interested, put it on a hold from me.
Yeah.
That you've got a bit more of a buffer with that business, but they've still got, I think, their AGM coming up in November, another set of quarterly results. This was only a trading update, I think, for ASX. So, yeah, just be patient. I think wait over the next several weeks. Let's see how the business is really doing, and then there might be an opportunity. But given the early signs of what we've seen today, If you're worried about selling it, then I think you could lean more towards a hold at the moment.
All right, so that looked like both those guests were sort of saying hold here with James Hardie where it is. Let's ask our guest of Wednesday, Mark Gardner from MPC Markets. Hello.
Good afternoon.
What do you think about James Hardie?
I kind of agree with the hold overall, just on the basis that, I mean, their accounts just seem to be, for a company that's been around as long as it has, it's in domiciled in 2 countries, they just seem to not have their house in order with the accounts, and they gave a fair warning just recently, and then obviously they've bounced back, via these sales. So, how they're gathering their metrics or how they're calculating them in-house is obviously not very, very much in order at the moment. So, if you can't report well, it's not a particularly great sign, and maybe that uplift is more not about them. It's possibly more about the general theme. So I'd say a hold for now. It's generally been a pretty good quality company in the past, and I don't mind it for for cyclical times. But it's very odd to be. I think they were heavily criticised for not for being so far under their previous guidance the last time they gave an update. So it's kind of is the benefit, I suppose, of being listed in the US, is that they've got that opportunity to go, oh, well, we wasn't quite as bad, it's quarterly updates. So, whereas if it was just ASX only, we're probably sitting around waiting for this result to turn around in 6 months' time, or 3 or 4 months' time. So, it is a bit of an advantage of the way that the US does quarterly updates, but Trump's trying to get them down to 6 months, so, which would be, I much prefer the quarterly when we do our, the quarterly updates for our US
Gives us
clients.
something to talk about, doesn't it? All right, let's talk about gold now. I had Jonathan on earlier. He's talking Gorilla Gold Mines. GG8 might be a stock that still has some time to run. Do you see, though, more broadly, the fact that we're likely to see a pullback in some of these gold stocks now that we're at 4,000, everyone getting a little bit worried about, is gold too frothy?
I don't think gold's too frothy long term. I think last night, we saw silver come off 2%, platinum come off 2%. It's usually a proxy for the US dollar, and US dollar was up about 0.5% overnight as well. So I think gold just really wanted 4,000 last night, and I just don't think that anything was going to stop it, basically. And you would have some enormous options triggers, daily options, monthly options, quarterly options being triggered at such a big level. So I think it was more the market sort of testing to see what was there, if there were any stop losses, etc. I probably favour it to maybe have at least a breather for some time. But you've got a government shutdown, you've got the Japanese are printing money, the Europeans will end up printing money, the US is going to end up printing money. So realistically, if you look at inflation-adjusted gold and inflation-adjusted silver, they're not even halfway to record highs, to be honest, from back in the 80s. So I still think I think Goldman's upgraded to 4,900, their target last night. They're usually, by the time that becomes public knowledge, it's usually a good sign to ring the bell. But because their clients have known that for many months beforehand. But I still think there's some legs in it. But I think that's where you need to be in the gold miners, particularly because whether it's 3,800 or 4,100, these guys are making 200% margins now at an average of 1,100 all-in sustaining costs. So, I think that's the place to be for now. So, Gorilla, we've been in just about every decent gold miner that's on the ASX this year, so which has done us very kindly. But I think silver and platinum particularly, I think have probably got a fair bit more upside in the actual spot price, and gold will probably start to sell a little bit. But until the governments get their house in order, US government shut down for now, hopefully. But coming out of that, I think we've switched some gold into healthcare recently because Trump's policies around healthcare are actually, or getting rid of those healthcare policies from the Obama and Biden eras is hugely unpopular and could hurt them in the midterms. So it looks like he's going to compromise. And first step of that was with Pfizer. And I think it's probably one of the worst 3 to 6 month periods healthcare's had in recent memory, probably a decade and a half or more. If you have a look at the IXJ ETF, it's been pretty savage. So I think there's some good bargains there. And once the government reopens, gold will probably have that bit of a breather. There'll be compromises in the healthcare sector, and you'll probably start to see that fairly defensive sector that does often get some quite nice growth sort of resume that upward trend.
What about defence? I mean, so much momentum in DroneShield at the moment. You're still looking at some of these players?
Yeah, I mean, I thought it was eye-watering at 4 billion market cap. I think it's nearly 6 now. I actually did an interview with Oleg Vornik from CEO of DroneShield for a defence webinar we had earlier this week, and I found it very hard to coming out of that to think of a reason to sell it, because they're looking at civilian applications to it, to their products. They've scaled up. They've got some big orders and scaled up successfully, which is usually a fly in the ointment. Those smaller companies, catch that big fish, and then they don't know how to service it. And they've got some. They're doing some cool things in AI as well, which basically their quarterly updates now will be live updates potentially, and their next version's coming up. So it filled me with more confidence. But I mean, there comes a point where the contract wins have got to justify, the market cap. But they are up for about 1.1 billion in contracts this year. So I think cheapest in the sector is probably EOS, and probably doesn't have the same total addressable market as DroneShield. Probably around about half at 5 billion per annum, whereas total addressable market for DroneShield is probably more like 10. And growing. I think it's looking at like anywhere from 11 to 14% compounded annual growth rate for the sector for the next probably 5 to 10 years. So, but EOS is only around the 1.8 to 2 bill market cap. They're both global players, and they're both globally scalable. They have inroads in Europe where all the money is going to be spent. So there is no reason they can't double and triple their market cap values as long as the contracts come.
All right, Mark, we'll leave it there. Thank you.
Thank you.
As always, Mark Gardner from MPC Markets, our guest of the day. All right, let's get into what we will be seeing in terms of course, some of these leaders. James Hardie was very solid. Mesoblast, of course, ratcheting higher. And DroneShield there, we were just discussing, up 7.5%. Liontown Resources also looking good today, up 5.7%, and Alcoa had a good day, up 5.2%. All right, let's have a look at some of the laggards today. Fletcher Building among them, Helia Group, Life 360, Catalyst Metals, of course, on its forecast, and Karoon Energy down 3.5%. In the small end of town, these are some of the winners of the day, including Novonix, which was up by an impressive 12%, while the laggards in the small end of town included Trig Minerals, Elevate Uranium, and Yandol Resources. Not much happening tonight. I don't think we're going to continue to see whether or not this US government shutdown kind of comes to an end, but we do get the minutes from the Fed's last meeting when they cut by 25 basis points. We've heard so much from the Fed since, but maybe some clues we haven't tapped into yet. Tomorrow, consumer inflation expectations for October from the Melbourne Institute tipped to ease from 4.7 to 4.5%. Gosh, it's very quiet, and it's only a Thursday tomorrow. Well, of course, it was a day of some weakness on the overall market. We've finished lower by 1/3%. Gold, though, as we mentioned, continuing to hold at this $4,000 level, breaking through that for the first time ever. Look, the ASX 200's done a little bit better on the close, only down 10 points or 9 points, in fact, 1/10%, 8,947. That is where we leave you this Wednesday afternoon. We'll be back bright and early from 9:45 a.m. Eastern tomorrow. We'll see you then.
The CIB is brought to you by Montgomery Investment Management. The world is volatile. Your financial future doesn't have to be. Find out more at montinvest.com.